What's up guys, back with another trading session slash trade recap. Took a trade today on NQ, netted me under 40 points, not too bad. I risk half of what I'm used to because rate announcement from the Fed is coming out in a few hours. I tend to risk much less when there's a important news that's coming out in the near future or the next couple hours, just to manage my risk. Capital preservation is key if you want to stay in this game for a long time, because you need capital to trade, and if you don't have that capital because you've sustained big losses, how are you going to carry on, right? But anyway, that's risk management for you. Back to analysis. So my high time frame bias on a daily, it's still bullish, right? Because there are equal highs here with low resistance liquidity run being put in. So my long-term bias is still towards the upside. Price made bullish moves in the last 2 weeks, but what recently caught my eye is that there was a sweep of the daily candle wick yesterday. So with that sweep, with bearing that sweep in mind, there could be potential reversal. We don't know. Price could potentially, seek to rebalance fair value gaps here and a volume imbalance here before moving bullish towards the upside. On the 4 hour as well, becomes a little bit more apparent and clear that buy side liquidity has indeed been swept here with a little bit more context and detail. Let me straighten that. And on the 1 hour time frame, we can see in the most current price action, there was a 1 hour fair value gap that's being put in, which price is currently respecting. And with that sweep of buy side, my bias turned bearish, right? Although my long-term bias is bullish towards the upside of this equal highs here, currently price is telling me that it wants to move down. Price can change all the time. The market is fluid, the market is liquid. So my decision remains fluid. Whatever the data is showing me, I'm going to tell myself to be okay with that. Whatever, I'm just going with what the data is presented to me, right? If my bias is bullish for in the high time frame, but in the lower time frame, when I want to see more context, is showing me that it's bearish, I'm bearish. So it's about being fluid with the market. It's about knowing what the market's telling you. Never marry yourself to a bias, because that's what trading is. You manage your risk, you manage your losses, and you just take what the market's giving you. Anyway, on the lower time frame, we can see low resistance liquidity run being put in, and with displacement towards the downside, what do I see? I could possibly see price, target these levels here, right? Sell side liquidity there. Let me take that away, sorry. Sell side liquidity there, or even there. But in the near term, we can target these ones here. So that's what I want to show you guys. On the 15-minute time frame, that's when I was looking at my sessions. So Asia here, UK here, and London here, sorry, and New York here. Now I always trade 9:30 and 9:30 open till 11:30, because you guys must really incorporate time when it comes to your trading, because time is when smart money or the big players are present, right? That's when volatility is injected to the market, and which gives you a bigger price movement for you to participate. If you're trading in the wee hours when the market is open but it isn't prime time, you find that the price action there isn't just too efficient. So 9:30 open, we can see again, on the high time frame, like I've said, on the 1 hour, there was buy side swept, displaced towards the downside. Having that in mind, frame the same model on a lower time frame. So on the 1 hour, it's bearish. So what am I looking for on the 15-minute time frame? If I see a sweep on the buy side liquidity, and is there displacement towards the downside? Yes. Displacement means fair value gap. So a 15-minute fair value gap being put in here, right? That's nestled within the 1 hour fair value gap. So we've got our inefficiencies being rebalanced. We've also got a 15-minute fair value gap here, bullish fair value gap that was disrespected. Now I know it's getting a bit too colorful here, so I'm just going to take my session indicator away. So we can see here, buy side swept, bullish fair value gap being disrespected, turn bearish. We've got a bearish fair value gap that's being put in. And I was monitoring this trade with the potential target being sell side liquidity here. Now I'm actually recording this just close to 11 a.m. here. I took my trade around, I think, 10 o'clock. So all this has already formed, but I wanted to show you guys on the 5-minute time frame that this is my thought process and my chart analysis. So as we can see here, like I said, on the 15-minute time frame, buy side liquidity has been raided, liquidity swept, mini turtle soup being put in. It's really important that you guys frame your context on high time frame buys. Like, I execute my trades on the 1-minute time frame, so whenever I see a displacement on 1 minute, I'm never going to take it immediately. I want to see displacement, I want to see structure on the high time frame, which is the 5-minute or the 15-minute, to give me a bit more context. That's the magic word, context. That is only when I can see what price is doing in the bigger picture. Right, so we can see that price on the 5-minute has clearly turned very bearish, disrespecting all this imbalance and all these BCs that were put in. There was a change of state delivery here, and also a market structure shift along with turtle soup, creating that fair value gap on the 15-minute time frame as well as the 5-minute one. Right, so that I executed my trade on the 1-minute time frame, and I entered around here. Why was it around here? So if I put my executions on, it was there. So why here? Because on the 15-minute time frame, price has already showed me, it has already tipped his hand that buy side has been swept. It went down here, right? I should have plotted this like that. Buy side swept, displaced towards the downside. Didn't sweep this sell side liquidity yet. Why? Because it's generating liquidity. Traders are putting their stop losses and their sell stops here. Another one here, another sweep. Another sweep. So how many sweeps were there in total? 1, 2, 3, 4. Right? There was a sweep that happened just post London kill zone during London session. Just at 8:30 open, there was a sweep again of the buy side liquidity all the way till 9:30. That's why I trade 9:30. I want to see what has happened all the way within the Asian, London, and 8:30. It will give me enough information to trade. Right, so on the 1-minute, let's take away that session indicator. The 1-minute time frame, now we can see that all the buy sides have been swept. Price has indeed show us where it wants to go. Now, why didn't I take my trade here? Why didn't I take my trade here? Well, this is the reason why. When price makes an impulsive move towards the downside, there's a very good chance that it will want to rebalance, I should say, any inefficiencies, or even rebalance towards the equilibrium. And smart money, when it comes to trading, if they're looking to short, they will sell at a premium, and if they're looking to buy, they'll buy at a discount. So for me, when price made a move towards the downside, I wasn't going to put my trade in just yet. Why? Because the risk to reward just doesn't make sense. Where am I going to put my risk? Well, I'm going to put a stop loss all the way up here for a... I mean, it's okay for a one-to-one trade, but you can do better. So I waited till price reached the discount area, 61.8. Chuck my risk to reward ratio in. Slightly better, 1.1 to 1.7. I was aiming only a 1.5 today, given given what the market's gonna do, and I was aiming for the sell side liquidity here as a lowest hanging fruit, because rate decision is going to come out. I don't know what the price is going to do. It's going to be chopping around most possibly. There are sell side liquidities. There are sell side liquidity levels here and here as well, but I don't think price is actually going to reach all the way there within my session. Right? It's I've got half an hour to go for my trading session, and I don't know whether I could wait that long. And I normally like to short my trades during my session, just to give me a peace of mind when I go to bed tonight. But as you can see, as soon as I took my trade off, price did a bit of a zigzag before turning bullish. So I'm glad I took it. So basically what I did was, as soon as price reached 1-to-1, I normally scale my trade down and put my stop loss to 50%, and I take off half of my position. And when price reach 2, I normally push it to break even, but it didn't reach 2 in this time, so I actually traded here, took half off here, and as soon as price turned bullish again, I just took my full trade off here, because I actually had my stop loss at break even, but I just didn't want to take it. I just didn't want to hold it for too long today. So trade recap is, on the higher time frame context, if price shows a bullish movement, frame your entries on the lower time frames. Don't just take trades based on what you see on the 1 minute or 5 minute. Frame it with your high time frame context. That will give you bias, that will give you confidence, and that will allow for you to trade better. Because sometimes on the 1 minute, right? Sometimes on the 1 minute time frame, and this on the side note, sometimes on the 1 minute time frame, you see price displaced towards the downside with aggressive move. But what, a displacement on the 1 minute could just be a wick on the 15 minute. So like, see here, all these wicks on the 1 minute, it looks like price is looking to go down, but on the 15-minute time frame, they're just wicks. So very important to frame your entry using high time frame context first before committing to a trade. Anyway, that's it for today. I hope you guys found that video useful, and I'll catch you guys at the next one.